Gautam Chhaochharia is with us. He's head of Global Markets India, and Sunil Tirumalai is head of Emerging Markets and Asia Equity Strategy at UBS Securities. They're joining us now from the sidelines of their India Summit 2024. Gentlemen, great to have both of you here. Good morning. Prashant this side. Thanks for joining in. Gautam, come in. I mean, it's an interesting time to hold the conference, but I reckon there'll be a lot of questions. I'm not sure if there'll be many answers. Because you've got this big change in the US, and you've got in Asia all this thing with China. Here in India, a lot of FII selling. What to your mind? What are the 2 or 3 most important questions you expect to hear the debates in India with regards to the Indian market to be around?
Morning, Prashant, and good to talk to you and the team. You made the right point. There will be a lot of debate around what happens to U.S. policy and politics, and we have expert speakers around that in the conference. And the other thing will be around the policy making locally, including reforms. So we had a successful macro trip to Delhi. We took investors to meet various policymakers. We do expect to have one of the government ministers talking on the same in today's session. So hopefully we get something out of that for our investors who, again, just to highlight, the interest in India still remains very, very high. In fact, the number of investors we are seeing this year, including from overseas, is at record levels versus recent history over the last many, many years. So the interest remains high, a lot of questions, a lot of uncertainty. There are enough corporates to answer bottom up, but yes, there will be top-down debates around both US as well as local policy making.
Sunil, good morning and good to speak to you as well. To your mind, I mean, in India, I mean, of course, there's this FI selling, and it's often difficult to distinguish, what is the head and what is the tail, and what's the trigger for all of this selling. But earnings have not presented themselves in a good way. It's been a pretty bad earnings season, Q2, and now all hope on H2 in that sense. What is your own sense, Sunil?
Yes, good morning, Prashant, and good morning to all the viewers. Yes, so it has been a fairly weak set of earnings. I mean, if you just look at it in terms of number or the percentage of beats, it's the lowest in the last 9 years, except the COVID quarter of March 2020. I think the silver lining is that a lot of the companies have actually come out and said, well, September as a quarter was weak, the festive season, which actually fell after the close of the quarter, which is the month of October and early November. Probably some signs of pickup are there. So we need to see whether that lasts. In the past, there have been years when the festive season pickup has continued, and after the festive season, and there are some years in which it has actually fallen off. I think consumption slowing down is the primary worry. Consumption across discretionary, across staples. We need to see whether that sustains. But otherwise, I think if you're looking at the banks, there are mixed numbers. There is credit growth slowing down, but asset quality has been some parts there have been worries, but other parts are okay. Yes, I think the quarter itself was fairly weak, but I would say there are some positive points that have come out afterwards.
Yeah, absolutely. I guess this is one earnings season where you cannot paint a sector with the same brush. Within a sector, companies have performed very, very differently. So it's more granular and more nuanced than normal. Take that point, Sunil. Gautam, just to get back to you, the Indian market has finally seen consolidation after a long time, right? Now it's almost 6 weeks of consolidation, fair amount of FPI selling. What do you expect ahead? More of this or a further downside, or at some point do you expect the foreigners to come back?
So first, let me say what Sunil has been publishing. He has been underweight India relative to emerging markets and remains so, given valuations and earnings growth expectations. If I talk to Sunil here, our economists, our analyst teams, and investors, my sense is that the consolidation may continue for a while till we see clear catalyst. Catalyst will be, I would say, 3-4 things. One is some visibility around high-frequency data points and growth picking up. Sunil mentioned about festive season data points. Does that continue for the next few months? That's one. Second, to me, a very big one is the policy stance, both fiscal and monetary. We have seen it not being loose or supportive enough of growth in the last few months. Do we see a change in that? So that's the second part to watch. Third is reforms. Post-elections, we haven't really seen a big reforms push or agenda. Again, if that happens, that will be the third catalyst to watch, and we'll see if that happens post-state election results and even US election results. And finally, what happens globally, like you mentioned at the beginning. What does Trump do, US policy stance, etc. So these are the four things to watch out for. Till then, it will be consolidation. Once we see clarity on these four things, mix and match, we should see support for markets thereafter.
You know, Gautam, it's really interesting that you're bringing up India's policy response or policy stance, because this is something new in the narrative that we've not been hearing so far. Because I don't think the growth concerns were becoming that real. Today we have the consumer inflation numbers coming through, and that's a very sticky sore spot. But really, do you think that, the growth weakness has become that entrenched that it requires both monetary and a fiscal response?
I wouldn't put it down that simplistically, that it's linked very, very directly or linearly. But yeah, that has played a part. Like fiscally, if you see, the spending is not what has been the case for the last 3-4 years, while the tax revenues keep on surprising. So the fiscal consolidation is happening faster. It happened much faster in FY24 than markets thought or what government forecasted. Same seems to be the case for first half, where the full year forecast seems very, very easy to achieve. Any fiscal consolidation is a drag on growth at some level. And even from a RBI perspective, again, we all know the inflation prints, and that's possibly creating some constraints on RBI to loosen up. But again, the liquidity stance or the rate stance is not helping. Like you can quote the CPI, but at a core inflation level, real rates are quite high. So again, the RBI's policy dynamics is influenced by the CPI print, but because of that policy stance, it is causing some constraint on growth activity.
And I've got that. Sunil, from your published universe, right? I mean, I'm sure stocks would have come off varying degrees. What is now looking attractive, Sunil, from an overall perspective?
So yes, I think if you actually look at the entire universe, one sector that is still trading below its long-term history of valuations is actually banks, right? So, it's a sector which is FII heavy. So when there is heavy FII selling, the sector tends to underperform. There have been concerns on, credit growth being much faster than deposit growth, and that has to be reversing, etc. And we are seeing all of that in the numbers. So, we would definitely look for selective opportunities, within banks. In the macro trip yesterday, I think the key takeaway was that the government acknowledges that, there has been some slowdown in the capex spending, but that could be a temporary thing, and they intend to scale up in terms of the spending, which means that the visibility for some of the industrials names could still remain. Even they have actually come off quite a bit. Where we would be a bit worried about is on consumer discretionary that is leveraged, that's based on borrowing with a retail loan and doing that consumption. That's where we would be a bit more worried about.
Have you guys published anything on implications for your coverage universe in terms of higher tariffs out of the US? And I mean, just broadly, I'm sure that's top of mind as well. And which are areas which are most impacted, etc.
So, I think the good thing is that India is way below the global rankings in terms of what our trade with the US is, and there are many other countries in Asia and other parts of the world which actually should see that as a bigger problem. But nevertheless, it's not completely off. I think in the past, if we go back to the last term of Trump, there were some issues, not so much on tariffs to Indian exports into the US, but more on India's tariffs on our imports. That seemed to be one point that was brought up. There were also some issues around visas for Indian IT services companies. But otherwise, I think tariffs as such is a bigger problem for many other markets, many other countries. Not so much for India. On the other hand, if some of the other non-tariff campaign promises of Trump could are also relevant for India, right? I mean, if there is a scale up of fossil fuel production in the US, and that helps bring down, let's say, crude oil prices or gas prices, India as an importing economy, could benefit. Net, we would say India is largely balanced or indifferent compared to many other markets which see a big swing and could see a big swing in their fortunes.
Okay, all right. Gentlemen, we'll leave it there. Sunil, Gautam, thank you very much for joining us here on CNBC-TV18 this morning. Good luck with the conference, and we hope we get an update in terms of what the takeaways are post the conference. Thank you very much for being with us here on the program.